Hello everybody, my name is Bruce Bradbury and I welcome you to a short little video where I've condensed about 8 hours of meticulous research on the subject of why the has Bitcoin been dropping like a rock ever since January 11th. Now, for some of you crypto nerds out there, you may have noticed that January 11th was the day that the SEC approved 11 spot Bitcoin ETFs. You see, many people, as did I, thought that the price of Bitcoin was going to skyrocket to the moon since these ETFs were just approved. Well, that didn't happen. Everyone was wrong. So I had to put in the research and share my findings with you all out there. If you're new to the channel, make sure to subscribe, hit that like button, and share this video with all your friends, especially your grandparents who still don't believe in the future of crypto. Okay, so most people intrinsically understood that this move to create ETFs would bring a ton of institutional money into the crypto space. Eventually, it is going to have that really great positive effect on the crypto markets. But where everyone got it completely wrong is that they thought those effects were going to be immediate. And if they bought on January 10th, they were going to hit a gold rush come January 11th. That wasn't the case. So in today's video, I wanted to deep dive into exactly 3 reasons why everyone got caught scratching their heads and how some of you noobs that bought on January 10th got absolutely murdered by this classic buy the rumor, sell the news event. This video, we're talking about institutional investors interacting with crypto assets. And the newest institutional asset, these ETFs that got approved on January 11. There were actually 11 spot Bitcoin ETFs. I like how 1111 lines up. Grayscale, BlackRock, they're among some of the few. We're just at the beginning of modernity of crypto, and I'm really excited. As you should be. You should be very excited. You should be doing as much research as possible. We begin with the Grayscale Bitcoin Trust. This is our primary source of pricing pain that we've seen in Bitcoin. You can see right on January 11th, there was a huge crypto drop off. You would have been murdered. Well, Grayscale has recently liquidated about $2.4 billion worth of Bitcoin so far. And it's crucial to understand why. Why are they liquidating Bitcoin? Grayscale is a massive company that has about more than $20 billion worth of Bitcoin in their holdings. And up until now, they've had the Grayscale Bitcoin Trust. However, now that ETFs are approved, they are transitioning to the investment vehicle of ETF. Now, the move from trust to ETF, it's super crucial. So you guys need to understand this. We're transitioning right now from a structure that often traded at a discount. And this is GBTC discount or premium to net asset value. And they are in the midst of transitioning to an ETF that offers increased liquidity and price transparency. In the past 15 days, they've liquidated $2.14 billion, which was a significant price hit on Bitcoin. Now, for the past few days since the 23rd, we've been in this uptrend. If you want to understand the mechanics exactly of a trust versus ETFs, subscribe and hit that notification bell because I'm going to have another video on exactly this subject in the next few days. Just know simply for this video that, this is the main event. This is the main conversation. The conversion of a trust to an ETF, it simplifies the playing field a lot. This was a long-awaited event, and it was just awaiting government approval. Okay, so next we're going to be delving into the world of OTC, or over-the-counter markets. And specifically with ETFs, they're purchased on the over-the-counter market. Contrary to popular belief, the approval of a Bitcoin ETF, it doesn't immediately open the floodgates to institutional money. Instead, these transactions occur over the counter, which is a process that avoids the direct market. It's not trading on an exchange. The real impact of the Bitcoin ETFs on market price, it's likely to unfold gradually over the next year and even beyond. And it's linked to the liquidity of major platforms and exchanges such as Coinbase and Binance. And you can read up a little bit on these articles. All of them are always going to be linked in the description below. This is a well-researched video. Everything I'm spitting is facts, okay? Now that we've established the ETFs are set to acquire Bitcoin predominantly through over-the-counter transactions, we also need to think about a thing called custody arrangements with these transactions, which also may not immediately deplete market liquidity in the way that direct purchases do. You can actually think about this like if you were to go onto Robinhood and you were to buy $100 worth of Bitcoin, right? You're not actually buying Bitcoin, you're buying ownership or stewardship of the Bitcoin that Robinhood owns. That Bitcoin isn't actually getting transacted on the blockchain. That Bitcoin is just stored and stewarded, is what it's called, by Robinhood. However, this doesn't mean that the market impact is negligible. As ETFs accumulate Bitcoin, whether through over-the-counter or through custody, the reduced circulating supply within these exchanges, coupled up with, growing demand or even sustained demand, can influence the market price. So Bitcoin go up in the long run, essentially what that means. The pivotal moment that we're all anticipating is when the cumulative acquisition of Bitcoin through these ETFs prompts exchanges to go and actually replenish and buy more. The exchanges have taken up all the demand. They've stewarded all of the assets, or most of them. So the exchange actually goes out and has to acquire more Bitcoin. Now, this is where that potential price of Bitcoin gets really driven up. Finally, we need to tackle the aftermath of FTX. The collapse of FTX, everyone knows about it at this point. This isn't a deep dive video into FTX, but the collapse of FTX, marked by mismanagement and lack of proper governance, led to a massive $8 billion gap between liabilities and liquid assets of the company. Brother, they stole $8 billion and it made everyone in the world doubt crypto. And you can actually go back to and note that around this time actually marked the bottom of Bitcoin in price because of the FTX thing. So if you haven't read ahead, recently it was reported that FTX sold about $1 billion of assets that were held at Grayscale within its bankruptcy proceedings. It's still happening. So they've sold approximately $1 billion worth of Grayscale Bitcoin Trust. And this also has an effect on pricing. Market analysts like Jordan Finiseth keenly observe these shifts. The prevailing view suggests that the large-scale liquidation by FTX's bankruptcy estate, it might eventually alleviate some selling pressure after it's over, of course. However, the path to stabilization, it's absolutely peppered with uncertainties. We're seeing a period of consolidation now, and people are reevaluating before any definitive trends emerge. It's not an instant movement. The resilience of Bitcoin, despite these headwinds, and Bitcoin has always prevailed, it's a testament to its foundational strength and the enduring faith of its supporters. In conclusion, today's journey through Grayscale Bitcoin Trust structural shift, the nuanced mechanics of over-the-counter Bitcoin buys, and the fallout from the FTX scandal highlights the complex interplay of all these forces that are shaping the crypto market. So you want someone like me who's looking at the computer screen all day long, doing the research, putting in the time to create these videos and give you guys the most up-to-date news. So if you appreciate all this, give me a comment. Tell me what you learned in this video, and is there something else that I missed or anything? I'm putting a bibliography of all of these articles in the bottom, in the bio of this video. You guys can go and do your own research yourself. In the past, my crypto videos have felt maybe a little like I'm trying to pump a crypto or anything like that. I just get overly excited when I'm making crypto trades myself. However, I want to have a new approach, and I really want to come from a research first, method. And I really don't want to be spreading my opinions because I'm learning cryptocurrency as well as you guys are out there. So with all that said, that wraps up our video for today. And if you found this content valuable, please consider subscribing to stay updated with the latest market trends in crypto, the latest analyses, the latest research. Your engagement and support, you drive the quality of my content. I really want to try to fix the quality, switching live and doing cool editing stuff, make it engaging. So until next time, stay informed and navigate the markets wisely.